Hello, this is attorney Drew Page with the law firm Randall Page, and today I want to talk about two of my favorite things, lawsuits and money. So I don't know if you've been following the Wall Street bets on the stock market. The last week, we've seen a big uptick in Gamestop stock, which went basically from about $25 a share to as high as over $500 a share in pre-market this morning. Things like AMC movie theaters and all this. And basically what happened is there is a Reddit community called WallStreetBets, and they started taking positions where hedge fund managers had been shorting stock. And so they went in there and tried to raise the price up basically so the billionaire hedge funds would go broke. It's essentially a Occupy Wall Street, but in the financial sector. Well, yesterday and today, online trading platforms like Robinhood, TD Ameritrade, and some of those guys began to block regular investors from being able to make purchases on those stocks like GameStop, AMC. As a matter of fact, this morning I went in and put a couple of $1,000s in a few of these stocks, and I'm not an investor, so don't do anything that I'm doing. I basically did this just so I could follow along and see what's going on with everything. So I got some GameStop, I got some AMC, some BlackBerry, Nokia, and one other one I can't remember off the top of my head. But I noticed as I was trying to make moves during the day, my TD Ameritrade account would stop working. And it completely just shut down for a period of time. And while it was shut down, all the stock numbers were coming down. And of course, I got upset because I knew what was going on. They're trying to allow these hedge funds to be able to secure a position against our interests. So at any rate, what we now have is a lawsuit that was prepared today based on a stoppage that happened today, a class action lawsuit against Robinhood, which is an online trading platform. And I actually have a copy of the entire lawsuit here. It was filed in the United States District Court, Southern District of New York. And the plaintiff is Brendan Nelson, and the defendants are Robinhood Financial LLC, Robinhood Securities LLC, and Robinhood Markets Inc. And they demand a trial by jury. It says the nature of the action. I'll go through all this, so hang tight because it's 9 pages. Robinhood is an online brokerage firm, paragraph 1. Paragraph 2, Robinhood purposely, willfully, and knowingly removing the stock GME from its trading platform in the midst of an unprecedented stock rise, thereby depriving retail investors of the ability to invest in the open market and manipulating the open market. So their claim is essentially that Robinhood, by shutting down their investors' ability to get into the stock market during this buying frenzy, constitutes market manipulation. The parties, plaintiff Brendan Nelson is a citizen of the Commonwealth of Massachusetts. Defendant Robinhood Financial LLC is a Delaware corporation with its principal place of business at 85 Willow Road in California. It's a wholly owned subsidiary of Robinhood Markets, and it gives the information about who they are. Robinhood Securities is essentially the same information, as well as Robinhood Markets Inc. Paragraph 7, the above-named corporate defendants herein referred collectively as Robinhood. So they are suing all of these entities based on the online platform of Robinhood. And if you see me looking away, I've actually got a live feed of all the stuff that's going on with this around the news, because this is blowing up big time. It's actually kind of interesting. Jurisdiction and venue. This court has subject matter jurisdiction pursuant to 28 U.S.C. 1332 D2. The aggregate claims of all members of the proposed class and subclasses are in excess of $5 million, exclusive of interest and costs, and there are more than 100 putative class members. And so that's what's required in order to create a class action suit. Paragraph 9, pursuant to 28 U.S.C. 1391, this court is the proper venue for this action because a substantial part of the events, omissions, and acts giving rise to the claims herein occurred in this district, where Robinhood distributed, marketed, advertised, and sold the trading services which are the subject of the complaint. Finally, venue is appropriate in this district, which is the Southern District of New York, because substantial sales, marketing, and advertising occurred. So here are the factual allegations beginning paragraph 11. And after this video, I'll put a link below so that you can actually see the PDF of this lawsuit. Robinhood is an online brokerage firm. Its customers place security trades through the firm's website by using a web-based application. Robinhood permits customers to purchase and sell securities, including futures contracts. Robinhood has experienced significant growth as a relatively new online brokerage firm. In 2019, Robinhood raised $323 million in funding at a $7.6 billion valuation. The firm markets itself primarily to younger investors and claims over 10 million users. Now here's an interesting paragraph, 13. On or about March 23rd, 2016, Robinhood's official Twitter account stated, "Let the people trade." That's going to come back to bite them here in a few minutes. They have since disregarded their mantra and have blocked access for millions of its customers to trade particular securities. Paragraph 14. On or about January 11, 2021, stocks in Gamestop Corp., which is GME, began to rise. At that time, Robinhood allowed retail investors to trade GME on the open market. Paragraph 16. On or about January 27, 2021, which was yesterday, Robinhood, in order to slow the growth of GME and deprive their customers of the ability to use their service, abruptly, purposefully, willfully, and knowingly pulled GME from their app, meaning retail investors could no longer buy or even search for GME on Robinhood's app. Paragraph 17. Upon information and belief, Robinhood's actions were done purposefully and knowingly to manipulate the market for the benefit of people and financial, it says intuitions, that's a typo, it should be institutions, who were not Robinhood's customers. And I have a sneaking suspicion based on my my interaction with TD Ameritrade today, there's probably going to be one coming their way as well. Maybe by me, who knows? We'll see where this goes. Since pulling the stock from their app, GME prices have gone up, depriving investors of potential gains. Additionally, in the event GME goes down, Robinhood has deprived investors of shorting GME in the hopes of the price drops. So they're basically saying that you can't get a contract to short that stock at the price that it is in case it goes lower, which is exactly what the hedge fund managers were doing and why this WallStreetBets Reddit group was trying to run up the price. Was all of these shorts that were in the market was basically going to put all these billionaires out of business. So this is, like I said, kind of an Occupy Wall Street kind of move, it seems. Paragraph 20. In sum, Robinhood has completely blocked retail investors. Notice, not hedge funders, but retail investors, you and me, the regular guys, the non-professional investors, from purchasing GME for no legitimate reason, thereby depriving retail investors from the benefits of Robinhood's services. The Financial Industry Regulatory Authority, which governs brokers like Robinhood, espouses Rule 5310 regarding best execution and interpositioning. That rule requires that Robinhood must make every effort to execute a marketable customer order that it receives promptly and fully. Wow, that's pretty damning for Robinhood. By failing to respond at all to customers placing timely trades and outright blocking customers from trading a security, Robinhood has breached these, among other obligations, and caused its customers substantial losses due solely to its own negligence and failure to maintain adequate infrastructure. Robinhood continues to randomly pull other securities from its app for no legitimate reason. My guess is that means AMC, BlackBerry, Nokia, Naked, and a couple. I think American Airlines was one they were targeting this morning as well. It had a tremendous jump up, and then all of a sudden it stalled once they were taking them off the trading platform. Upon information and belief, Robinhood is pulling securities like GME from its platform in order to slow growth and help benefit individuals and institutions who are not Robinhood customers, but are Robinhood large institutional investors or potential investors. So they're claiming that they're kowtowing to the big money and not the regular investor they claim to represent. Paragraph 24. On the morning of January 28, 2021, which was today, plaintiff used his Robinhood app, searched for GME on Robinhood's app, and found it was unavailable. The stock did not even appear, although GME is a publicly traded company available on all platforms. Thus, plaintiff, like so many others, lost out on all earning opportunities. So the class action allegations begin in paragraph 26. Boy, there's a lot of typos in this. The lawyer needs to... I'm not sure if this was done pro se or if this was done by an attorney. There's a lot of typos in here. It says class action allegations, but I'm sure that they'll be able to fix that. Paragraph 26. Plaintiff brings claims pursuant to Federal Rule of Civil Procedure 23 on behalf of the following class, as defined below, all Robinhood customers within the United States. Paragraph 27. Additionally, or in the alternative, plaintiff brings claim pursuant to Federal Rule of Civil Procedure 23 on behalf of the following subclass. All Robinhood customers within the United States who were not able to execute trades on GME after Robinhood knowingly, willfully, and purposely removed it completely from their platform. Excluded from the class are the Robinhood entities and their current employees, counsel for either party, as well as the court and its personnel presiding over this action. This action has been brought and may properly be maintained as a class action. Numerosity, which is basically where they're stating that they don't have the exact number of who's in the class, but they're going to try to figure that out. Commonality in paragraph 31 shows who is included in the group. It's just a lot of boilerplate for how to set up a class. So you can read that when I click the link below. I don't want all of you falling asleep watching this video. So typicality in paragraph 32, adequate representation in paragraph 33, and all of the remaining paragraphs essentially relate to forming the class. So that goes through paragraph 37. So cause of action number 1 for breach of contract. In paragraph 39, in order to use Robinhood, a potential customer must enter into a customer agreement. Plaintiff and all class members did enter into a customer agreement with Robinhood. Robinhood breached its customer agreement by, among other things, failing to disclose that its platform was going to randomly pull a profitable stock from its platform, that Robinhood failed to provide adequate explanation to their customers, that Robinhood knowingly put their customers at a disadvantage compared to customers who used other trading apps, that Robinhood failed to provide access to its own financial incentives to pull certain securities, including GME, that Robinhood's prohibited plaintiffs from performing a timely manner or at all under the contract, that Robinhood failed to comply with its applicable legal, regulatory, and licensing requirements, and that Robinhood failed to exercise trades and actions requested by customers. As such, Robinhood breached its customer agreement. Robinhood's failure to perform resulted in damages and losses to plaintiff and class members. Cause of action number 2, breach of implied covenant of good faith and fair dealing. So now they're making the claim not just that it's a contractual issue, but also essentially that they are a fiduciary for their members. Cause of action 3, beginning in paragraph 51, is a negligence claim where they failed to exercise reasonable care in performing their responsibility to their investors by preventing them from being able to access GME stock. Cause of action number 4 begins in paragraph 58, and that is a specific claim for breach of fiduciary duty. And then here's the relief requested. Number 1 is enter an immediate injunction requiring Robinhood to reinstate Gamestop on their trading platform, enter an award for plaintiffs to be determined, enter an award for attorneys' fees and costs, enter an award for punitive damages for the willful, wanton, and reckless behavior of defendants, and any other relief this court deems just and fit. And it looks like the attorney is Alexander Cabaceras out of New York City, New York. So we'll be keeping an eye on that. So here's the interesting thing about this lawsuit and what's going on. If you're not in the stock market, and this may seem like it's boring, this may not seem like something that's really groundbreaking, but this issue has actually brought AOC and Ted Cruz together. I mean, this is an incredible day, because I would never have thought that Ted Cruz would retweet AOC and say that he agrees with what she has done. But I'll see if I can pull it up on my phone. Let's see. Ted Cruz. There we go. And I'm sorry, I don't have my fully optimized screen, so I'm basically going to have to see if I can switch this around. Let's see. All right, so this is a view of my computer screen. Don't judge me, okay? But you see where it says fully agree, Ted Cruz, and here's AOC's tweet about we need to know more about Robinhood's app and the decision to block retail investors from purchasing stock while hedge funds are freely able to trade the stock as they see fit. So as you can see, this is really getting some pub, not just in the news, but also by senators and Congress people about this big problem. Because if you were trying to get in on the wave and you were rocked down like I was, I mean, I knew this was kind of a speculative thing, but I kind of wanted to see how the wave would roll. And it looks like some of the stocks are heading back up a bit. They've opened it up some, but they have not completely opened it up to free trade in every format and in every platform. So eventually the push will likely rise up. But GME, I believe the short position on a lot of the hedge funds ends tomorrow. So people were trying to ride the wave up all the way through the end of tomorrow, essentially, so the hedge fund managers would lose out on their short positions. And then probably these other folks would probably just sell out and the stock will come back down. There's been a lot of talk on CNBC as to whether what the Wall Street Bets community has done on this app called Reddit is essentially market manipulation. But the definition of market manipulation doesn't seem to fit what it is that the Wall Street Reddit folks have done. In fact, a lot of their argument is that they're not doing anything different than when these big hedge funds come on the news and they have a short position and tell everybody else that they need to short it and that the stock is terrible, which benefits them in the long run. So the Reddit community is essentially saying, hey, they're doing the same thing. They're not professionals. They don't have any investment cachet. They're just putting on there what they're doing. If people want to do it, they do it at their own risk. And so, but that's the situation. And if you don't know about this, it's just because you haven't had the news on or you just don't care about the stock market, which is fine. But this is going to be an ongoing legal situation because it's showing the light on what is happening to the retail investor versus the big hedge fund investors and what they're able to do. And I think in the long run, the people are going to be speaking out, trying to get regulators to handle the hedge fund folks and leave the retail investors alone, because they already have the benefit of extended market trading that regular retail investors don't get to have. They have the benefit of billions of dollars of support. They get the news platforms. They get to go on CNBC, and we basically just get whatever's left over and hope that we can make money on it. So it'll be interesting to see how this lawsuit plays out. I'll put a link to it in the comments below. I'm attorney Drew Page with the law firm Randall Page. You can reach me at my Suffolk, Virginia office at 757-935-9065. You can visit my website at www.randallpagelaw.com. And you can email me, drewpage@randallpagelaw.com. Thanks for tuning in. And put in the comments what you think about this situation. Do you have any money in any of these stocks? And what do you think about the fact that these trading platforms that are supposed to benefit their retailers are instead actually benefiting the big hedge funds and hurting their retail customers? Please like our Facebook page. And if you're watching this on YouTube, please subscribe to my channel and like this video so it can get out more and more. So take care and let us know if we can help you.